The Ethereum Classic Monetary Policy explained. Ethereum Classic's monetary policy depends on 6 variables: the premine, eras, block rewards, block frequency, uncle blocks, and the fifthening. What is the premine? Because Ethereum Classic and Ethereum were one chain at the beginning, they have the same premine. The co-founders did a crowd sale or pre-sale of Ether tokens in 2014 to raise money for 18 months of development. This pre-sale amounted to 60 million coins. Additionally, they issued 12 million coins for the founders and developers themselves. All this means that 72 million ETH and also ETC were issued in the first block. This is called the premine. ETH and ETC were one coin, but now that they're two separated blockchains, one has a premine of 72 million ETH, and Ethereum Classic has the same premine but in ETC. What are the eras? After Ethereum forked away from Ethereum Classic in 2016 on block 1,920,000, the ETC ecosystem decided to establish an algorithmic and fixed monetary policy just as Bitcoin. This monetary policy is divided in eras, and in each era there is a 20% discount in the miner block rewards. The eras last 5 million blocks, which is equivalent to 2.38 years. The first few eras were as follows. Era 1, from block 0 to block 5 million, the miner reward was 5 ETC per block. Era 2, from block 5,000,001 to 10 million, the miner reward was 4 ETC per block. Era 3, from block 10,000,001 to 15 million, the miner reward was 3.2 ETC per block. Era 4, from block 15,000,001 to 20 million, the miner reward is 2.56 ETC per block. This is the current era. This is why I say it is now. And the eras will continue as above until rewards diminish to 0 by the year 2136. What are the block rewards? As ETC is a proof-of-work blockchain, and to create blocks, miners have to spend a lot of energy and capital in equipment and mining operations, they need to get paid to create new blocks. Therefore, the Ethereum Classic network issues ETC for miners and credits them in their account each time they create a block. These are the rewards mentioned in the eras section above. What is the block frequency? The frequency of blocks is how much time passes between blocks, or how much time it takes to create each block. The Ethereum Classic network is programmed so that the blocks take 15 seconds on average to be created. This means that miners get paid, thus new ETC are issued every 15 seconds. What are uncle blocks? Because with a frequency of 15 seconds per block, remember that Bitcoin is slower, 10 minutes per block, it is possible that more than one miner may have created a valid block for the network. Then the ETC, or original Ethereum designers, decided to pay a small fee to those miners, even if their blocks are stale and not used for the canonical history of transactions. So these miners get paid for their work, but their blocks are not part of the main blockchain. These blocks are called uncle blocks. What is the fifthening? As explained previously, in each era and every 5 million blocks, which is equivalent to every 2.38 years, the ETC protocol discounts the payment to miners and uncle blocks by 20%. Each time this event happens, it is an important milestone because it lowers the inflation rate of the cryptocurrency. This event is called the Fifthening, as 20% is a 1/5 discount of the block reward. What is the annual inflation of ETC? Both ETH and ETC started with a high inflation rate because they were one blockchain until block 1,920,000. But now ETC has lowered its dilution rate per year due to the Fifthening process and will be near zero in the future. What is the annual inflation rate of ETC? Here you have a chart then with all the eras until the year 2136, so more than 100 years into the future. And as may be seen above, the current inflation is 3.91, so this is the current era. This is where ETC is paying 2.59 ETC per block, and the inflation rate at that payment rate is 3.91% per year, and will be less than 1% by the year 2036. So if you see era 9 in 2036, because the block reward is going to be discounted 1, 2, 3, 4, 5 times more by 20%, the inflation is going to be less than 1%. This is considered hard money and even harder than gold. This is why both Bitcoin and Ethereum Classic are considered digital gold. How many ETC will there ever exist? Given the eras of ETC, the block rewards and frequencies, the discounts per era, the average uncle block rate, and the fact that it is divisible by 0.1701 or 1e minus 18, then the ETC maximum supply in all of its history will be approximately 210,700,000 ETC. Thank you very much for watching this Emerald educational video, and please remember to download Emerald here, emerald.cash/download. Thank you very much.